1. The personal assets of the owner of a company will not appear on the company's balance sheet because of which principal guideline?
Correct answer is B.
2. Which principal guideline allows a company to ignore the change in the purchasing power of the dollar over time?
Correct answer is C.
3. Which principal guideline requires the company's financial statements to have footnotes containing information that is important to users of the financial statements?
Correct answer is C.
4. Which principal guideline justifies a company violating an accounting principle because the amounts are immaterial?
Correct answer is C.
5. Which principal guideline is associated with the assumption that the company will continue on long enough to carry out its objectives and commitments?
Correct answer is B.
6. A very large corporation's financial statements have the dollar amounts rounded to the nearest $1,000. Which accounting principle guideline justifies not reporting the amounts to the penny?
Correct answer is B.
7. Accountants might recognize losses but not gains in certain situations. Which principal guideline is associated with this action?
Correct answer is A.
8. Which principal guideline directs a company to show all the expenses related to its revenues of a specified period even if the expenses were not paid in that period?
Correct answer is B.